Markets can be as unpredictable as a cat at 3 in the morning. One minute everything is calm, and the next, chaos. That's where safe haven assets come in. Think of them as your financial panic room, designed to keep your money safe when the economy decides to throw a tantrum. But how do they really work, and how can you use them to build long-term wealth? Let's break it down. Gold, your shiny plan B. Gold has been the go-to safe haven for centuries. Why? It doesn't rust, it doesn't become obsolete, and everyone wants it. Start small. You don't need to buy a gold bar like a James Bond villain. Instead, invest in gold ETFs or fractional gold accounts. It's liquid, tangible, and doesn't need feeding, unlike your dog. Cash, the original safe haven asset. Cash might seem boring, but during a market downturn, boring can be great. Keep an emergency fund equivalent to 3 to 6 months of expenses in a high-yield savings account. It's like having a financial parachute. You won't regret it when you need to pull the cord. Defensive stocks. Everyday essentials. Look, people aren't going to stop buying toothpaste or paying their electricity bills just because the stock market is down. Utilities, healthcare, or consumer staples companies tend to stay stable. Start by researching ETFs in these sectors. They're like the comfort food of investing, reliable and always in demand. Government bonds, the trust fund. Bonds might seem like something only your grandpa would invest in, but hear me out. U.S. Treasury bonds, for example, are backed by the government, and you can start with as little as $100. Plus, there's no awkward Thanksgiving dinner associated with this trust fund. Alternative investments, digital safe havens. If you're into cryptocurrencies, stablecoins like USDT or USDC can act as a digital safe haven. They're pegged to fiat currencies, meaning they don't fluctuate wildly like Bitcoin. But remember, crypto is still the Wild West, so don't bet the farm, just the shed. The thing is, safe havens aren't for getting rich quick. They're for not losing your shirt when the market decides to play dodgeball with your portfolio. The real magic of wealth creation happens when you balance these safe havens with growth-oriented assets. Think of it like a good diet. A mix of treats and veggies keeps you healthy and happy. In the end, the only true safe haven is a diversified portfolio. So mix it up, keep learning, and don't panic when things get tough. Because if there's one thing we've learned, it's this. In the world of investing, preparation beats prediction every time. Let me know in the comments. I'd love to hear your thoughts. Thanks for joining me, M Squared family. If you like this video, you'll love the one on screen right now, packed with even more tips to help you save and thrive. Let's break the cycle of ruin together. Click and see you on the other side.